Hey everyone, in this video, I'm going to do a review of a member request. Evelyn Murphy asked if I could review DocuSign stock and answer if it's a buy, hold, or sell. I'm going to review its latest quarterly earnings results, look at DocuSign's valuation and its prospects going forward to answer if I think the stock is a buy, hold, or a sell. Once again, thank you to all of you who are joined as members and subscribers of the channel. It really helps support the channel, so thank you so much. Let's take a look at DocuSign. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so heading into this investor update, I did have DocuSign stock rated as a buy, and you're going to want to see if the latest quarterly earnings results changes that recommendation. So let's take a look. So in the first quarter, DocuSign reporting revenue growth of 7% to $709.6 million. Revenue growth has decelerated for the e-signature company, and billings increased 5% year over year to $709.5 million. Now, the long-running tailwind for DocuSign is that electronic signatures are so much more convenient than signing documents in person. It's a no-brainer. It's just so much more convenient for both the person that's signing the agreement and the person that's trying to get the agreement signed. Both sides of the equation benefit. What's more, electronic documents are more easily stored. You don't have to pay as much to store all of those documents. They take up less space. That's another benefit. And finally, you can search stored documents, electronically stored documents, much more easily than you can search filed documents, physically filed documents. So all of those advantages will spur growth for the industry, and that's likely to continue for several years, perhaps more than a decade, because the industry has been slow to adapt to this new technology. Now, there will be some documents that will remain physical. Some really important documents will remain physical. They won't be turned electronic. But for the most part, I suspect the majority of the industry to move electronic signature over the next decade or more. So that's the tailwind for DocuSign. The company has already turned the corner on profitability. GAAP net income per diluted share came in at 16 cents in the most recent quarter. That was up from 0 or flat in the same quarter last year. Net cash flow from operations increased to $254.8 million, up from $233.6 million in the same quarter last year. So revenue is growing, profits are growing, cash flow is growing. They're not growing explosively, but they're growing, right? Revenue almost at double digits, cash flow at double digits, profits much faster than that. Additionally, DocuSign launched a new program, DocuSign Intelligent Agreement Management, which includes two really interesting products. The DocuSign Maestro, which includes automating and accelerating agreement creation and processes through flexible, customizable workflows using code. It integrates DocuSign products, including e-signature, ID verification, and data verification with third-party applications. So this new product is likely going to boost growth over the next few quarters. Further, this product, I think, could be even more helpful, and that is DocuSign Navigator, which is a smart repository that enables organizations to centrally store, manage, analyze agreements from any source. So this can be useful for businesses that want to look up documents. Maybe they forgot what was in a certain agreement and they want to look it up. They want to reference it. They can go and easily search it. It reduces time to search. And these two products, remember I highlighted earlier in the video and I said that the industry is moving slowly to e-signature. They're not adapting to this new technology quickly. These two new products will help facilitate some transition. Businesses that were on the fence, if they know they can get these two services, I'll be like, all right, let's go ahead and make the switch. We were thinking about going to e-signatures from here on out, but we didn't do it because we were hesitating for one reason or another. This might be the thing that puts us over and that makes us choose to go e-signature from here on out. So exciting new innovations from DocuSign. likely to lead to more growth. I'll be looking forward to see how that evolves going forward. DocuSign also recently made an acquisition of a company called Lexion, which is a leader in AI-based agreement technology with solutions designed to automate workflows and extract vital information from contracts. So two big things from contracts, right? First of all, a business that's typically conducting or facilitating several contracts every day or dozens of contracts every day, that takes a lot of time. If you can automate that process using artificial intelligence, that's a huge enhancement. Secondly, if you can get information, extract information from your contracts, that can be data that you can utilize for insights. So double benefit there for DocuSign. It'll be interesting to see how they digest this acquisition and how it helps the business. And lastly, DocuSign's board of directors authorized a share buyback of $1 billion of outstanding common stock. I like to see companies facilitating share buybacks, especially companies like DocuSign that have an asset-light business model. They don't need very much capital to reinvest into the business. The cash flow that the business generates, the company can return to shareholders because it's an asset-light model. It doesn't need to continue investing in infrastructure, in research and development, etc. It can use what it has, and it's sufficient to continue innovating, and the rest it can return to shareholders. So investors did not like what they saw from DocuSign in this report. The stock was down over 3.7% following the announcement, and the disappointment was in the guidance for the next quarter and the next year. DocuSign is guiding for total revenue between $725 and $729 million, but for total billings between $715 and $725 million. That was slightly below what investors were hoping for from DocuSign for the quarter. Now, what I typically like to see is billings in excess of revenue. That signals that growth is accelerating. And although we don't get this from DocuSign for its upcoming quarter, we do get it for DocuSign for the fiscal year. As you can see, billings is forecasted to come in at roughly $3 billion for the fiscal year ending January 31, 2025, and revenue forecasted to come in at $2.9 billion. So billings expected to get better throughout the year, although for the second quarter, a little bit disappointing, and that's what caused the stock price to decline. Longer term, over the next 5 years, analysts on Wall Street expect DocuSign to grow earnings per share by 20% per year each year over the next 5 years. I think that's a reasonable estimate, if not underestimated. I would take the over on that if I had to pick under or over on its growth for earnings per share over the next 5 years. And finally, DocuSign is trading at a relatively cheap valuation, a forward PE of 15.64, which is lower than its earnings per share expectations for the next 5 years of 20%. So all in all, to update my recommendation for DocuSign stock, I am keeping the stock rated as a buy. I liked what I saw from the company in the quarter. Billings, a little bit disappointing, but I like the growth in cash flow. I like the growth in profitability. Revenue growth is decelerating. That's understandable, although undesirable. I do like the new innovations DocuSign is launching. So all in all, I like the company. I like the risk versus reward. I like the asset-light business model. To me, electronic signatures are a no-brainer. It's not going to be a massive trillion-dollar industry. It's just one nice little market that is moving in DocuSign's favor over the next decade or more. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.